Hey guys, this is Vic here with another episode of Bitcoin in 30 minutes. And in this episode, I'm going to give you my perspective of what happened in 2025. So, 2025 is now come and gone, and the consensus in the Bitcoin and so called crypto community is that there was no blow off top euphoria phase in 2025. This has been generally accepted as a very disappointing year for Bitcoin. And since this podcast is Bitcoin centric, I'm going to just focus on that and not focus so much on crypto, although crypto does impact Bitcoin in certain respects. So, what happened in 2025? So, let me just kind of get straight to the point. We had major corporate adoption, major headline news. We had major state sovereign adoption and increased adoption. And we also had major rule changes in accounting. Some of the biggest corporate names, such as Michael Saylor, making a huge name for himself with Strategy, which is former MicroStrategy, now called Strategy, issuing debt and stocks to get cash so that that company could smash buy Bitcoin and hold those Bitcoins in corporate treasuries, proving the business model that Bitcoins as digital finite collateral created through this mining industrial architecture, or I should say model rather, is actually valuable. Like you can actually boost and boost your corporate financial position by holding Bitcoins over time. And this is exactly what Michael Saylor did. So it went from a company that was basically was very cash rich and was surviving based on income and surviving based on the software, the product that MicroStrategy, now Strategy, uh, uh, their business was software, but it wasn't a huge profitable company per se. Small company did was buy Bitcoin and put those Bitcoins on the balance sheet to strengthen its financial posture, and it worked. It did work. I mean, it went from it went like I think it went like 500% or something like that. I mean, don't quote me on that, but it was definitely over 100%. And it that increase in green percentages just attracted more investors, and so it was a self-fulfilling prophecy and a self-fulfilling systemic model where the greener you are, the more investors you attract, therefore the greener you become, right? But that's critical because at the same time, what Michael Saylor did was introduce the volatility of Bitcoin into its corporate stock price. And the inevitable decrease in stock price happened in probably around October, September 2025. And while some companies throughout the world followed MicroStrategy's models, many did not. Still to this day, many companies see Bitcoin as vaporware, which is basically something with no value, no intrinsic value. They see Bitcoin, the technology itself, as not easily understood by its investors or by its board, many of whom are boomers and older Gen Xers who simply just don't get Bitcoin at all for a variety of different reasons. And so, yeah, the companies that followed that model did not come on board, or excuse me, the companies that could have followed the model, like Facebook or Meta, Apple, Microsoft, NVIDIA, some of the top names in the world did not follow that model. And they don't really need to, because they have products that are extremely strong. They're extremely cash heavy. They have major cash flow. And yes, it is true that the cash on their balance sheets are decreasing in value every single day. And this goes back to what I think happened to Bitcoin in 2025. The blow off top did not happen because the expansion of the Bitcoin network and the purchases of Bitcoins for corporate capital or sovereign wealth or family offices did not meet expectations. And they didn't for a variety of reasons. And one of them is that there's just not enough understanding out there, and a lot of misconceptions about what Bitcoin is and what risks are involved with Bitcoin. And I say misconceptions, and I emphasize that because the mainstream media and the main way of thinking is that Bitcoin is risky because it has no inherent value. Well, that's just completely not true. Because you can go and buy a Bitcoin. Nobody will sell you a Bitcoin today for under $60,000. So to say that it has no inherent value is ridiculous, because its price today is $60,000. So, and its price just like 6 months ago was $124,000, which is what its all-time high was. So at the end of the day, the price of a Bitcoin is largely driven by sentiment, and that sentiment is largely driven by news, and that news is largely driven by human behavior, and that human behavior is largely driven by understanding and knowledge, and either it being accurate or not accurate. And so at the end of the day, we just need more time. We, being the Bitcoin ecosystem, need more time and more education. So corporate adoption didn't take off. The second thing that happened to Bitcoin in 2025 is that large players are the ETFs, exchange traded funds, which opened up trillions of dollars worth of potential investment into the Bitcoin ecosystem. This is huge. However, just like it is with big players, if you own like a big business, whenever a big business buys gross, like thousands of products or thousands of widgets or whatever it is, they demand a lower price, right? They demand a gross price. They do not pay retail prices for this stuff, right? And there is a reason why, right? So if you're Walmart and you're buying 1,000 or let's say 1,000,000 little widgets or whatever to sell to retail, there's risk there. There's risk that the widgets could be a manufacturing defect. There's risks insofar that you have to like transport them, logistical risks. There's inherent risks when you buy things in gross like that. My suspicion, and this is just my opinion, is that when big institutions that are ready to buy $2 billion worth of Bitcoin come into the game, they demand a super steep discount on the price, right? And those people or entities who hold the Bitcoins, like those investors who have been holding Bitcoins, since 2010, for example, they are going to submit to the price. They are going to bend the knee, so to speak, to the new entrants into the system. Because without the new entrants, right, the network will not expand, right? Unless it's an emergency type of situation, like let's say banks default and there's a rapid deceleration or rapid bankruptcy of most of the banks throughout the world. In that type of scenario, then yeah, anybody will pay any price to get into the Bitcoin ecosystem, right? Because it's an emergency, right? But in 2025, there was no like major emergency that warranted a premium price to come into the Bitcoin ecosystem. So if I'm a big bank, or let's say not a bank, but let's say I am a sovereign wealth fund in Dubai or Qatar, and I have $50 billion worth of cash, both euros and also US dollars in cash, and also maybe some yen. And I say, okay, well, I'll buy, however much Bitcoin $50 billion can buy, because that's like a drop in the bucket for me, because I'm worth about $5 trillion, right? Um, what's the first thing that you're going to do? You're going to say, well, I'm definitely not buying Bitcoin at $150,000. Absolutely not. Like, you're going to give me all these Bitcoins at like $35,000. Steep, steep, steep discount. And the reason why they do that is because of the inherent risks. I mean, you're deploying $50 billion in cash, right? And that any kind of risk, however slight and however minimal, whether it's quantum, whether it's regulatory risks, whether it's some other new token like Ethereum or Solana becoming more accepted, whether it is the weakness of Bitcoin and its transactions, that it can only support this many transactions per second. Any kind of like defect or risk is going to be highlighted as a major problem, and that is going to decrease its price. And so ultimately, I think, in my suspicion, I think that's what happened in 2025. I think that the new players, they have deep pockets, and they're like, look, if there's any kind of defect with this concept of an open source public blockchain, mined finite digital collateral of 21 million cap, I am going to scream those defects from the rooftop and demand that these prices get lower before I deploy my billions of dollars of capital. That way, later on, if those risks manifest, the boards or the custodians or the trustees of this cash can say, look, we did our due diligence. We bought at the lowest possible level, and please don't fire us. So I think that's another big part of why 2025 was not a blow off top. If you look at the charts, I think another reason why 2025 was not a blow off top, if you look at the charts, you'll see that Bitcoin its volatility has decreased somewhat over space and time, or over time, I should say. And that decrease in volatility is both to the downside and also to the upside. Mostly to the upside, because of the inherent concern that institutions and people have with larger numbers. At the end of the day, there is this concept about the rule of large numbers, right? As a mathematical concept. And I think the way it goes, and I'm not a math guy by any means, but just listening to other talking heads in this space, the way it goes is, as the numbers get larger, and this goes with any kind of chart or any kind of big pool of money or stocks or whatever, it is more difficult to push the numbers higher, insofar that you need more cash to push up 1% a Bitcoin price that is at $125,000. You're going to need a lot more cash to push that price up 1 to 5% than you would if the Bitcoin price were just $25,000. So just basic mathematics there. And that's true. And I think that is compounded with, or you can say aggregated with, this notion that the institutions are waiting to buy it at its very steep discount, which is the comment I just mentioned. One of the other things that happened in 2025 with respect to the decreasing in volatility of Bitcoin and the Bitcoin chart over the 2008 or 2009 inception of Bitcoin was this idea that Bitcoin was on a 4-year cycle. it's fairly commonly known to traders and folks who read charts that at the end of the day, your past performance is not going to equal a future prediction or a future return. It's just not. That's a logical fallacy to believe so much, and most folks with half intelligence will tell you that that's just not true. And that was one of my main concerns when I first got into Bitcoin, and folks were saying, hey, this thing is probably going to pop here in a second and just explode because look at the past chart. Those are all probabilities, and at the end of the day, they're just not guaranteed. And so what ended up happening in 2025 is that those probabilities did not come true, despite all the talking heads online and in the mainstream media that Bitcoin in November and December was going to pop to $140,000 and $250,000. All the altcoins were going to rally and all this other garbage, basically. I mean, at the end of the day, talking heads are going to talk, right? You put them on TV, you give them some paid revenue to be there, and they're going to talk, and they're going to probably say something that's going to rally the masses and say something highly emotional, right? Get something to suck in your cash so that they can dump their coins on you, right? And so when those talking heads were talking, I did not buy more Bitcoin. I mean, Bitcoin was at $110,000, and folks are saying it's going to go to $200,000 by the end of Christmas. And I'm like, okay, great. I'm happy for you, and I'm happy for Bitcoin. I mean, I'll be a happy man, right? But I didn't buy more. I mean, and that's the difference between investing and trading with emotions. So if you buy something based on emotions, you're totally gonna get screwed in this life. So you have to stop doing that first of all, right? And so it's kind of like, so at the end of the day, let me go back to the chart. So the charts show that volatility is decreasing to the upside now. The charts show that the Bitcoin is steering away from its 4-year cycle, right? In other words, it's becoming even less predictable today than it ever has been, right? That's not good, right? That's not good for an institutional buyer who wants to buy $5 billion worth of Bitcoin for a California retirement fund, right? Unpredictability of an asset that has shown history volatility, like price go up, price go down, and then no prediction of future increases or expansion is not good, right? But you have to couch that and look at that fact through the lens of, okay, this asset is growing. Like there are more players buying Bitcoin today in 2025, late 2025 or early 2026 than ever before. There are some influencers and talking heads that are calling for $24,000 Bitcoin and $34,000 Bitcoin, maybe even the $50,000 Bitcoin. What's really interesting is that at the end of the day, Bitcoin often does not respond to talking heads. It responds to excess cash, or some would say liquidity. Primarily, I think it primarily responds to excess cash and liquidity in the global economy. Right now, there is not very much excess cash or liquidity. A lot of the excess cash and liquidity, I think, is where the system dictates that it end up, which is in the coffers of big companies on Wall Street, not with the American middle class, not with retail. In fact, most retailers, most middle class and upper middle class Americans are basically scrounging to get by. And so they do not have an extra $1,000, $5,000 to buy some Bitcoin. Now, if you're in the business class, you probably have a little bit of money to spend on Bitcoin. But you're like the institutions. If you're in the business class, you want to get the best freaking price possible because there's this concern that the Bitcoin could go down even further. So where are we with Bitcoin in 2026? Well, we're experiencing a bloodbath. Okay, the 4-year cycle's over. which results in increased uncertainty, both from the upside and also from the downside, which is exciting. Personally, I think that is extremely exciting because if it screams to the downside, you're going to get some very cheap Bitcoin, which is awesome because those what they call OG Bitcoiners, those who are in Bitcoin ecosystem since 2010, well, they're holding on to their Bitcoin, and they should have sold at $100,000. I would have if I bought Bitcoin for like $100 and the return is $123,000. I would totally sell like half of my position, right? Bitcoin tends to punish the ultra greedy. Now, I'm not saying you can't get greedy a little bit, right? But you got to understand that the excitement and the desire for massive gains in this space results in a feeding frenzy, right? It's almost kind of like those birds that fly, like wolves or raptors or other birds of prey that are like circling a carcass, right? They're just waiting for that carcass to bleed out, and then at the end of the day, they're going to swoop in and eat it all up. That's what these big investors and sharks are looking for. They're looking for a carcass, a dead carcass that they can come in, swoop up, and eat it up. And you can either pretend like Bitcoin is not a thing and that you should be buying some, or you can just hang around with the other raptors and birds of prey and predators and just keep an eye on it, all right, and wait until that big raptor or shark comes by and just starts eating it up. And that's when you go in. You can't wait more than a day. It'll happen in a day. It'll literally happen in a 24-hour period where it'll just pop like 30% in a day. And you got to be patient. So that's another characteristic of Bitcoin in terms of its volatility. You absolutely have to be patient over time. You cannot get greedy or too greedy on it. You can get a little bit greedy and flush, but you can't get too greedy because it'll destroy you. And you got to know when to buy and you got to know when to sell. And just watch the frenzy happen. The pariahs that are feeding on this thing, and so we are in. I don't think it's a bear market, so I disagree with the majority. I don't think it's a bear market. I think it is a significant dip and a significant correction that allows major institutions and global entities to come in with their infinite cash and financial problems. And when I say financial problems, I mean this idea that there's really no safe place to park your excess cash today except in Bitcoin. Okay, so where is Bitcoin going to be in 2026? That is the multi-million-dollar question. The answer is no one really quite knows, to be honest with you. And that's exactly where big players want you. They want you to be confused, not confident, weak, and playing the game that they have set before you, which is a cloud of mystery, a cloud of doubt, so that these prices can get lower and they can come in for the cheap. And will the institutions, and when I say institutions, that means banks, ETFs, sovereign wealth funds, pension funds, super old school money funds, you name it. They're all basically waiting on the sidelines to get in at the appropriate price levels. And that's where they want you. They want you to be confused, doubtful, so that the price goes lower and then you sell your Bitcoin. That's exactly strategic, and that's where they want you. And so I think 2026 will, so far, it's been like that, just kind of up and down a little bit, up and down a little bit. There are some that are calling for a major correction bear market. I disagree. I do not think we're going to have a bear market. I don't think that a $30,000 Bitcoin is feasible today. I think that at worst case scenario, a $50,000 Bitcoin would be the bottom. But given my perspective and worldview, I think that if everything is stable in terms of financial, uh, sovereign debt, cash issuance, everybody has enough money, and there's no major emergency that pumps another trillion into the economy, then yeah, I think Bitcoin will be stable at about $50,000. And then probably pump a little bit to like up to 70. And then apparently 75 is a very, very major psychological point of no return. I think once it breaches 75,000, we're going straight to 135,000. And then once it breaches 135,000, we'll go straight to 210,000. These are, in my opinion, psychological, nice round numbers that investors and traders like to see. And also retail investors, I think, like to see too. 2026 so far is very quiet. It's late February of 2026. It's very quiet. I think that's intentional. From the government point of view, things are getting slashed and cut, and I think that's good. We've got the Doge initiative. We've got tariffs. We've got some insourcing of jobs. I think that's good. I think ultimately, however, this is just not reinvigorating the United States into becoming a major powerhouse, more so than what it already is, such that the $1 million or million-person welfare lines are cut in half. Doing this is going to take decades, not just one presidential term. And so, in the meantime, I think the welfare lines and the government handouts will continue. And that means more printing of money. That means just everybody gets cash. Everybody gets cash, or I think eventually it'll be a US dollar token, like we've already have some countries already have digital tokens. And hopefully Visa, MasterCard, and other third-party rent seekers will be completely obliterated and out of business. Because I think that is partly why things are so expensive today, is that businesses, both big and small, have to pay the middleman, which is like this 2%, 3% cut on basically this antiquated technology of payment systems and payment rails. I mean, it is the most bogus, nonsensical technology in the world that we need payment systems and payment rails to make digital transactions when everything's connected and everyone has a supercomputer in their pocket. It's really stupid. So those are my comments for 2026. Anything can happen, including a volcanic eruption in the Bitcoin price, exploding it up to $120,000, right back to where it was. And I think that the big players want everyone to be confused, and that's exactly what's happening. And so it just takes one big player to get in and say, okay, I'm going to buy $500 billion worth of Bitcoin today. And then the next thing you know, we're in a confidence bull market yet once again. So be ready. If you're not ready, then you're going to miss out. So those are my thoughts for 2026. 2027 has, I don't really have any thoughts yet for 2027. I'm still trying to get my brain around 2025 and 2026. And to be clear, I have been wrong in the past on the Bitcoin bull. I'm usually pretty good at the bottoms. I'm able to pretty much call the bottoms. I'm not so good at calling the so-called tops, mostly because I actually disagree that those are tops. So the 125,000, I disagree that that's a top. I think that's like a mid-range sell-off point for a significant correction, which is what we're experiencing right now. And I think the blow-off top is yet to come. So those are my thoughts. Zoom out into a longer time horizon, and you'll see what I'm talking about on the charts. The Fourier cycle is broken, thank God. Some of the old Bitcoin OGs have gotten out of the Bitcoin game, which is awesome, thank God, because they're small-minded. And Bitcoin is going global. Its time has come. You can't put the toothpaste back to the toothpaste bottle. If it's not Bitcoin, it'll be some other global decentralized currency. And so it is what it is. So be ready, position your pieces correctly, and get ready for the blow off top. Thanks for listening. Make it a great day.